Cool. We'll get going here. We'll get moving along. Start off with just some house cleaning stuff a little bit, and then I want to move into a little story time. Hopefully, it spawns some discussions into Q&A and whatever anyone else wants to talk about. I kind of want to just we don't even really need to have a conversation necessarily around this part, but I just kind of want to figure out the group meets thing. It's nothing like dramatic. I just want to like tighten things up, make sure we're building the right way long term. And I just want to be direct a little bit. I've been running 7 days a week nonstop, and that is not sustainable. That's how burnout happens. And if I burn out, then the whole environment suffers. So this isn't about pulling back. It's just about making sure we build something sustainable and that lasts, right? So the weekend decision, I think, here's the, right now it's Saturday groups in the morning, Sunday office hours for me, or sorry, Saturday groups in the morning, Sunday office hours. I think this decision is super, super easy because no one's showing up to Saturday meets. I think I'm axing Saturdays, and I'm going to take Saturday as a Ben gets to do whatever he wants day. So this decision's easy because no one's showing up. And especially when summer's here, it's just tough, right? We're all trading, we're all working during the week. So I am going to axe the Saturday groups. And again, the decision's easy because no one's showing up anyways. So we're not going to force things that don't have participation. But I want to reframe this a little bit. Wednesday groups staying the same. I think that's kind of our core product as far as meets go. I think I would like to add something during the week. I don't have an idea there. So if I'm taking away Saturday, I want to add something during the week, and it doesn't have to be an evening thing. I know a lot of us trade New York, and we don't have to figure this out tonight, but it could be like that hour before lunch, since it's usually kind of quieter anyways and nothing's going on, we break into something. We cover execution, we cover the trading day, we cover lessons. So we kind of take, maybe it's a Friday, maybe it's Friday end of day, right? So we move Saturday to Friday end of day. And that way most of us who trade New York can make it because we're there anyways. And then the people who are overseas, the Spaniards and the Slovakians can join too because it's an appropriate hour for them. Just an idea I'm throwing out there. So Wednesdays stay the same. That's our core session. We're adding another session, but I don't know what that looks like yet. Does anybody have any thoughts? Nader, Kush, Mike, Brian, Vasco.
Thoughts on which?
So I'm taking away Saturdays just because it just makes sense to take away Saturdays. And what do we do? I want to add something, not take away. So Wednesdays right now are kind of like our deep dives. And then I want the addition to be process, or like the Saturday groups were, where we break down the week. How did our trading week go? What worked? What didn't work? And extract lessons from it. And that could be Friday, lunchtime, before lunch, or otherwise.
Yeah, I mean, to me that makes sense because you're closing out the week, right?
Yeah, I agree. Like the Friday lunchtime would be great.
Yeah, that's kind of what I'm leaning in, probably the way that I'll go with that one. I'm still gonna do Sunday. I'm at the computer anyway Sunday morning, just doing office stuff. So I'll probably still show up on Sunday for office hours. So if anybody wants more personalized stuff or help or what's the stop loss, Ben, that's what that's gonna be for. Sunday office hours. So that's pretty much it. I want to be clear and draw the line cleanly. Because this matters a lot for how this community works. The free side will always have value. You'll get context, ideas, ways to think about the market. You'll understand what matters. But understanding is not the same as execution. If you want real-time decisions, feedback, actual back and forth, and growth, that happens in an environment where people are committed. That being said, we are going to do this every once in a while. You'll be able to sit in our meetings. And most of our meetings don't work this way. Like, this is a break from our normal Wednesday meets. Maybe not the latter part of this, but the beginning is. So every once in a while, we'll give you guys a peek inside. Every once in a while, I'll make myself available on Sundays for you to hop in. I got doing live streams every day at 4 o'clock Central Time, 5 o'clock Eastern Time now. So you can catch me on there as well. And I even think what I'll end up doing is probably hopping in Discord so people can kind of join in on the conversation when I'm live, because it's more fun that way too. But you can watch all the breakdowns you want. Cool. Any questions, comments, concerns before we move into story time?
What you could do, man, as far as like, taking requests to do charts and shit, make it to where you have to be inside of the Discord to get people into the Discord, but you have to be inside of the Discord to request the chart for the stream.
Yeah, I thought about that. I thought about, having debates and conversation and helping people, because that's, it seems what people like. I'll tell you what's boring for me. Kush, I bet you know what's boring for me. Take a stab at it.
I don't want to say it because it's what I like.
Well, it's not altcoins.
Oh, okay.
I'm just going to say like chart after chart after chart after chart after I've already been staring at charts all day.
No, that's the truth.
You know what I mean? So I'd like to kind of switch it up a little bit. So I like your idea. I do. I've been thinking about that.
You could go over some stuff, break some shit down and do your thing, for the first half. And then while you're breaking stuff down, that gives people time to join and jump into the Discord and sign up, get in, put their request for the chart they want to see, and just makes people want to come into the Discord. You just got to get into the free Discord, and you open up a Discord to the streams like that, and that's where you request your shit.
Yeah, or even just questions, because I like, how I like to talk. I like to teach. I like to talk about trading and risk and all that fun stuff. So even that stuff I'd welcome. Getting off into tangents, that's my favorite thing. So yeah, I've actually been thinking about that. And that would be an everyday thing. People can hop in and chat, go over stuff, watch, request, ask questions, for sure. 100%. I'm with that. Anything else before we move on? Let me make sure no one's... There's a chat here too, guys. Vasco says he's early. I gave Vasco shit. Vasco always shows up at the end of my streams. All right, so I want to have a story time. I want to tell you guys a story about somebody that I know. We're going to call this guy Marcus. And Marcus could read the charts like nobody else. He could read the charts like most people read a sentence. This is a true story, by the way. You could drop him in any market, any chart. I don't care if it's orange juice futures or crypto or stocks or Forex or what. And this dude, any time frame, right? And within minutes, this dude would have the structure mapped. He'd have liquidity zones marked out, full scenarios broken down, ready. People paid to sit next to this guy, recorded calls, veterans nodded when he spoke. Marcus knew everything, right? But when it came time to execute, he froze. He jumped in early. He overtraded. He revenge traded. He blew up accounts. So here's what happened. He would spot a level that he would be certain at, textbook setup. He'd explain it to everybody. When a price approached that level, he'd size in, a lot of times big. The level would break. Instead of exiting, Marcus would add. It's a trap, he'd say, like classic liquidity or whatever the excuse was. He'd move his stop, price kept going, he'd moved it again. And by the time that he could admit that he was wrong, the damage was already done, right? And then The second time was worse. The third time was even worse. Because why? Because Marcus knew better. He'd literally watched himself do it in real time. He just couldn't stop. He just couldn't stop for some reason. So the distinction here is Marcus, what broke him wasn't his knowledge. It was something else entirely. When your whole identity gets wrapped up in becoming the smart one, the chart guy, the analyst, a quiet shift happens. Trades stop being about edge and start being about ego. It's no longer, is this a good trade? It becomes, I need this to be right. See, I called it, guys. And that's probably the cruelest irony here, is his knowledge actually made it worse. He was never short of a reason to stay in or even enter a trade, right? This level should hold. This is clear. This is obvious. Of course, this is going to happen. He could justify anything, and he did, right? So he sized bigger and bigger and bigger and skipped confirmation and pressed buttons when he should have just walked away. So in theory, Marcus was clean, but in execution, when price was moving fast and the P&L was ticking, red numbers or even green numbers sometime, that's when behavior takes over. And Marcus never trained his behavior. He only trained his analysis. So I think there's, at the end of the day, we can boil traders down to two types. I think there's the explainer, right? Yeah, they can teach theory, they can break it down, and I'm not taking away from that. They can sound sharp, right? They can mark out a chart, they can come up with ideas, and you know what? A lot of times those ideas work. A lot of times they work. I'm not taking that away from them. But the executor follows a plan, takes small losses, waits for conditions, and survives. And only one of those guys gets paid long term. And I think there's lessons in this. There's uncomfortable truths in this. I think every single one of us has a little of Marcus in us. I think the difference is what separates the Marcuses who blow up accounts and lose, and us all having a little bit of that in us, is the recognition, right? So the difference is between whether you recognize it or whether you become it. So I think that's why simple stuff matters so much. Pre-market plan, whatever your confirmation is, your confirmation checklist, 1 or 2 trades done, right? Not because it sounds good, because it doesn't, right? It doesn't get clicks. This shit doesn't get clicks, but because it removes the space where Marcus lives. And that's the plan, right? We all have that person in us. We need to remove the space in which Marcus thrives. So when the setup isn't there, you don't trade. When the plan says stop, you stop. I'm not smarter than the market. I just have rules that protect me from myself. So the hungry eat, but the hungry who also know when to wait, they eat every single day. Marcus didn't fail because he lacked knowledge. That's not the point. He had the knowledge. He could do a chart better than I can do a chart. He failed because he never bridged the gap between knowing and doing. And that gap between knowing and doing is what separates amateur traders or charters, people who can chart, from people who can execute. And there's a big distinction there. And that gap is everything. So I think there's some key takeaways here. I think, number one, knowledge and skill are not the same thing. Trading isn't about knowledge. Trading is a skill. I think you can understand risk management completely and still violate it the moment that you're in a live position. Everyone in here has heard me say 1% risk on a trade. Everyone in here, some of you guys for years, right? It's not like I just started saying this stuff. Some of you guys have heard me say, don't move your stops. Stops go where invalidation is. You can know all this stuff, but you can also violate it the moment you're in a live position. So the market then, based on that, and I know any of us who have been here for any number of time and who have executed consistently over the last however many months or however many years, we've been there, right? I've been there. I know what I should be doing, and then I do something completely different. So the market does not pay us for what we know. It pays us for what you consistently do. But I also think, and Brian, I think we had this conversation one day, or a conversation similar to this, confidence from analysis or overconfidence. I think we've all seen them, right? People who are overconfident. I think confidence from analysis is dangerous. I think the more that you understand something, in this case, maybe it's a setup, the easier it is to justify sizing bigger and skipping out on steps, sizing up, moving your stop when you shouldn't, skipping confirmation. Because why? Because then your conviction becomes your biggest risk. Not the dollars, not the setup. It's your conviction then becomes the risk. So, and I think ego is part of that, right? It's the silent stop mover. When your identity is tied to being right, you stop managing risk and you start defending your opinion. And that's when small losses become account killers. And boy, have I been there. And I think some traders, I don't know that everyone's trading for money. I think I think most traders are trading for stimulation, to feel smart, to be active, to get a hit of that dopamine. And if you can't sit on your hands when there's no setup, you have to ask which one you are. And that's an honest conversation that you have to have with yourself. If you can't sit on your hands, then which one are you? So I know which one I was. I was the guy who could not sit on my hands. I was the guy who needed to push buttons. I was the guy who needed to prove something to my ego. And lastly, I think structure removes the space where bad behavior lives. And that's going back to, there's a little bit of Marcus in us, in every single person in here. We need to remove the space where Marcus lives. So things like, why do we meet an hour before market opens? It's not because I like to wake up earlier, because I come up with my plan then. I'm doing the job before the bell rings, so I don't have to do anything except for press the button when the bell rings and the market confirms my idea. So pre-market plan, confirmation, 1 or 2 trades. The point isn't the routine itself. That's not what the point of this is. For me, it's that it leaves 0 room for Marcus to show up. So I don't know. I guess I'm going to open it up a little bit here. Where do you guys see Marcus in yourselves? What's one behavior that you know is wrong, but still catch yourself doing?
Definitely have moved the stop before. Move, take profits.
Cut trades early, not let runners run. Get a little nervous, not sticking to your plan.
My biggest thing is I'm always trying to hit a home run, and I'll be up $200, $300, $400 in profit, and it looks like it could go to the level I want it to go to, but I've been getting better about it, learning to take, just to leave my take profit alone and take my profits and, wait for the next trade.
Yeah. And I think, go ahead, Vasco.
I think for me, which I noticed this is past through recently, if I get the perfect entry, like if everything works perfect, right? Like if I'm long, I hold it. I hold it too long. So it's like if I get a perfect entry, I think Bitcoin going to 200,000 for a long. If I'm going short, if I get the perfect short entry, Bitcoin's going to 0. Instead of, I don't know, it's just like you said, I guess it's the ego or this over pride. Like I did this perfectly, and I don't want to let it go. You know what I'm saying? I mean, if that's making any sense, the better perfect entry I get, the longer I want to hold the trade and I'll do what I'm supposed to.
So both of those things that Kush and Vasco mentioned are things that I've struggled with, which is, if you boil it down to like, what is it? It's greed, right? At the end of the day, it's greed. We're hoping for more. And I used to, a younger me, before I was a trader and really knew about money or the psychology of money or how money works, I used to like ponder like when is it enough? Like when do I quit trading? When have I made enough money? Then I used to be like, well, you got the Jeff Bezos and you got the Elon Musks and the Ellisons of the world who are worth hundreds of billions of dollars or whatever they're worth. Like, isn't that enough? And then when I started trading, I kind of got it a little bit. I don't know if that makes sense, but it's like, when is enough? And as traders, we have to be okay with just small wins. And I've been telling a few people this over the last couple weeks. I you know what I bet? I bet if everyone in here who's not consistently profitable at the moment just targeted 1R and that's it, and you took profit at 1R every single time, I bet you it would blow your mind. I bet you in 6 months, the results would blow your mind. Because what's the formula? What's the formula to winning? It's make more. Would you win, lose less? You know, it's small wins, small losses, and then you get a runner every once in a while. Big wins.
Consistency.
Yeah, 100%. And survival, right? Staying alive long enough to let that math work. So I don't... Go ahead, Ryan.
Yeah, I think in general we have an ability to perceive time as something that can work for us. Like, we want the home runs, but stacking averages or stacking small gains is really the 90% of what we'd be doing most of the time. Like, I think you made a video a while ago about how just let it be boring and let time, like, try to envision yourself what can happen if you do the same thing for the next 11 months, you know, and then because in one day it doesn't seem like enough, but if you can compound it over 11 months, it's a whole lot. So I just think a perception of time and allowing your actions to play out over time, versus like, oh man, if I don't fucking get this today, I better, I better revenge trade, or I better add more to a position, or all the classic bullshit. But if we can just slow ourselves down and let this thing happen at a, at the average speed limit instead of trying to get to our destination at 150 miles per hour, I think that's like, I don't know, just the time thing.
No, I think that's beautifully put, and I can relate to that. I know most people in here listening right now who's been doing this for any number of time can relate to that. I used to swing for home runs. I used to try to make every single trade make me a Lambo, right? Every single trade was, I'm going to go buy a Lambo, and that, just a spoiler alert, it didn't work out. I don't think anybody in here bought a Lambo off of one trade. Maybe one day when I survive long enough, my capital's big enough, but it's just not real, right? That's the fairy tale. That's the make believe. But I like what you said. It's 90% of the job is small wins. It is. Every once in a while, yeah, you get a big one, you catch a runner, but more often than not, you're not hitting 50 Rs, 100 Rs. You're not 100xing your money, right? It's, and if you do the math, and I mean, I can do it real fast for you. Just to kind of, for people who haven't heard this before. All right, so this is just a thought experiment. It's not realistic, but just to change the way that you perceive money. So let's just say you have a $10,000 account over a 5-day week for a year using 260 trading days. If you only stack 1R, well, I guess we're going to call it 1% in this case, because the math, I mean, we're going to call it 1% per day over a year. That's $132,973. I think most people could probably live off that. That's more than the average salary I believe, right? Isn't it like $40,000 or something? Right? It's about $122,960 if you take out the holidays. So the big, it's not realistic because you're going to have losing days, but it is realistic because you're also going to, it's realistic if you can follow the plan, because you're going to have some days you make 1%, some days 3, some days -1, some days -2. But that's never what I swung for. That was never what I swung for. It was always, I'm going to 10x my money on this trade. This thing's going to the moon, right? So the biggest takeaway is that 1% a day compounded is massive. And then take that 122K, compound it one more year with 1%, and it's crazy. It's insane. So again, probably not realistic, but it is a good thought experiment on, we don't need home runs to make money. We just need consistency. Which is 90% of the job, like Ryan said. Every once in a while, you get that runner.
I know that book that you had recommended everybody read, The Psychology of Money. There's one thing that stuck with me. It's like, this quote. It's like, there is no reason to risk what you have and need for what you don't have and don't need.
Say it again. Just so the people in the back can hear it.
There is no reason to risk what you have and need for what you don't have and don't need.
Yeah, if nobody's ever read A Psychology of Money, it's a pretty good book to read. So I don't think we have. Well, first of all, I'll tell you, there's zero. I think anymore, at least, explainers in the group, in at least in the premium side of things. Might be a couple on the free side. I think it's executors, and I think you guys would probably agree with that. So I don't even think I need to ask the question, which one are you right now, or which one you want to be, because I see a bunch of people executing, right? But that doesn't mean we don't still mess up. I mess up. This never goes away. I'm human. So what's one rule in your plan that you still break, at least every once in a while, maybe more than once? Common rule. What happened and what do you do about it?
For me, it's I let my long-term bias impact what the market's doing in the moment. And then the way I fight it is just honoring the New York sesh, the morning setup, and my entry model. And it's easier said than done.
Yeah, for sure. And that's honest. And thank you, Brian. I think that's everything's easier said than done. But have you come a long way?
Oh yeah. Yeah.
I think so too. Who else?
I think for me, that I still do. Sometimes I oversize more than what I should with assets I'm not familiar with. I'm familiar with Bitcoin, so I'm comfortable. But with other assets, I'm not as comfortable. But I still, I guess, my risk. I do not risk accordingly to my knowledge of a different things. You know what I'm saying? So instead of me learning it and watching it, I sometimes jump in head first, and that's something I still do.
So I see your trades. I see your NASDAQ, your gold trades. So how are you? What are you doing about it? Are you recognizing that? Are you sizing down now?
All right, so let me see. Monday, like I got beat in the head. I took a couple losses on gold, so I wrote down that I'm not trading. I'm stop. I I guess I'm building my confidence back up. So I left that stuff alone. Went back to Bitcoin for a while. Um, but that doesn't, and I know now that um I learn better by just watching the price action. If I watch it and watch it, like I might not trade no more on Mondays and Tuesdays, um, and Sundays. Not unless it's obvious, but Mondays and Tuesdays I'm just gonna watch the price action. Just watch it. Just try to get an idea how it flows. And and just if I do trade it, just trade smallest. I don't care if I'm just trading with $20. I'm just going just to get a feel of how it moves.
So my biggest rule that I've broken more than once and still creeps up for me, and one that I have the biggest struggle with, is re-entries. So I get stomped out. My ego says you're still right. So enter again, and then I lose. Same spot, same trade. That's my biggest hurdle, is entering, re-entering, entering. I've got a lot better. I mean, it used to be bad. It used to be like that would kill my whole week. Like one day would just kill my whole week. Who else?
I know one thing I'm doing better now. I don't overtrade. And say I get stopped out a couple times, like having a bad day, like you're saying, I just walk away. I'll leave it alone. I let it breathe. I can't lie. I do keep a loose eye out. They say I'm out and about. I'll look at my phone app on Trading View and shit. But you know what I mean. I trade less now. I respect the bag way too much. I've had my head beaten over the years ever since I started leverage trading, and I've lost thousands of dollars. So like, I feel like, just learning the hard way for me and then learning what I've learned in the Discord, and working with you guys, man, it's just made me appreciate the bag way more, and I'm extremely defensive now. As soon as I got a decent chunk of profit, my long or my short's cooking and it's going, I put my stop immediately into break even, or at least to cover my fee, and then slowly move it into profit. But yeah, definitely that's one thing for me, is that over trading, just like Vasco's saying, just watching it. And obviously if you get an obvious trade, take it, but just disciplining yourself to that you don't have to be in a trade. You don't have to, you're not, that missing out aspect and dopamine release, you just kind of learn ways to control it. And it's a you versus you thing, man. Just like anything in life, learning to control yourself and control your impulses.
Yeah, let's segue off of that. So how do you know when you're trading for edge or trading for stimulation or activity? What does that look like? Does anyone have any personal experience with that? I know I do.
Well, for me, it's sometimes, it's just obvious. It's in your face. You're seeing it. It's, you could just, it's almost like it's just, you've seen it so many times. You could see something and you start, like in the morning, putting your levels together, and, you see the move that, there's a good chance that's, the move, you know, and then, just going about it like that. But you could tell you're doing too much when you're just constantly trying to force it. You're constantly trying to, you know convince yourself, hey, this is the move, even though it ain't the move.
Yeah, I think the clearest signal for me is, what am I doing between trades? So if I'm trading, well, I'm just going to use the word for edge. If I'm trading for edge, the space between trades should feel normal. What does that mean? That means I'm okay with nothing happening. Got a plan. I'm watching for specific conditions. And when they don't show up, I'm done. right? Nothing. Like doing nothing is the trade. And you close the laptop, shut the computer, whatever it is, right? I think the absence of a trade doesn't bother because no trade was the trade, right? It's like you were saying, like protecting the bag, right? That's the job at the end of the day. If you're trading for stimulation, and I'm going to be honest, most people are. They're just not honest with themselves about it. This is an expensive hobby, and I think a lot of people, it is a hobby. I think the space between setups feels wrong. It doesn't feel normal. It feels like you're missing something. There's an itch. You start lowering your criteria. Well, it's close to the level, or it's close enough confirmation, or whatever it is. Whatever the excuse is that makes you push that button early. You start you're just hyper focused, watching every tick on the 1 minute chart, not because something changed, right? Nothing's changed, but because you need to feel involved. You're not waiting for the market to come to you. You're chasing that. And I can tell you that from experience. I think trading for edge looks like boredom, right? With occasional action. Bob, are you able to talk?
Yes.
You remember what you told me, and I was like, dude, I'm proud of you for it. In regards to boredom.
Oh yeah. When my wife came in and said I look bored.
Yeah, that's how it should be. That's how it should be. That's how trading should be. Trading for simulation. Go ahead.
I fight to stay awake sometimes.
Yep, that's trading. It's not Lambos. It's, you know what I mean? It's boring, man, and it should be. When you can get to the point where trading, I know this sounds funny, especially probably to new people, but when you can get to the point where trading is boring, you've crossed the Rubicon. You really have. Trading for simulation looks like energy that you just can't explain. Like you feel on, right? You're watching every tick. You take a trade, it works. Instead of stepping back, you immediately look for the next one because that win felt good. So you want more of that good. You want more of that dopamine hit. Or the flip side of that is worse, which is you take a loss and you have to get it back right now, today, not tomorrow, not with a clear head, but right now because the market owes you a win. And I've been there. I've been in tilt where I've literally like argued with myself that the next trade has to win because I have to, right? I've lost how many trades in a row? So the next one has to win. The market owes me one. Market doesn't owe you shit.
It's like going broke at a casino, man.
That's
That's
the
what I
same
was gonna say.
behavior.
It's like a slot machine.
It's the same
And
behavior.
it will fuck your week, your month up. You'll blow your account, revenge trading, man. Like all the bad shit like that, I've done it, man. And I didn't have nobody to guide me or to like show me that kind of love or anything, man. It was dark, man. And you're just it'll fuck your week up, your month up, man. You just put you in a bad mood. Everything's just pissing you off, and
And then it spills into other areas of your life.
oh yeah, you fight with your old lady, you just fucking everything up, it fucks your energy up. Your energy ain't right, you ain't gonna make money. You know what I mean? When things are good, you're not stressing money and you're just like a robot, just looking for your move, man. You're sticking to your strategy, execute, take profit on it, don't move your stop. It's just a trade. Walk away. When it gets boring like that, it's almost freeing. Because say my short that I've been in doesn't work out right now. I'm at break even. It don't work, whatever. I'll walk away and go do something and reset my brain and come back, check shit out, check levels out, make some make some lines, sit there and put some alerts on. The alerts help me out. The alerts, when shit gets boring, I'll set my alerts. I'll hear it on my laptop. I'll come back. If I hear an alert, I know something's going on. I know, the fact when you just stick night and day, and you didn't put a stop loss on, and your shit's 50% negative, and you're just sick to your stomach waiting for that email to tell you've been liquidated, and you're staying up all night losing sleep, like that ain't the move, man. That's just, you're killing yourself. You know, when you're able to walk away
100%, man.
and treat this shit with a little respect and stick to your guns, man, and you know, tell yourself no. You know, tell yourself, dude, stop being a pussy. You know, listen to what, you know, your people are telling you, man, and stick to the fucking plan, you know. It's just freeing. Like, I don't have those long nights and stressful nights and stressful weeks no more. My shit's growing. And for me, getting the bag to a comfortable amount to where I could take a trade and get my 1%, 2%, and it's actually making me some money. That's the goal. Until
Yeah,
then, I'm defensive and I'm treating the bag with the ultimate respect.
and I think
Because I worked hard for that money.
I think that's an honest test, Gush. I think if you if ask yourself before you enter a trade, if this trade doesn't trigger, will I be relieved or disappointed? And if you're relieved, you're probably trading for edge. You know the setup isn't perfect, and part of you hopes it doesn't come. But if you'd be disappointed, if you feel like you missed out on not trading, that's the stimulation talking. That's the lack of dopamine in the brain talking. You wanted to be in the market. The specific setup was almost secondary. Like the setup was secondary, right? You just wanted to be in the market. And I think the other tell is what happens after a good trade. So after like a genuine trade, you should be satisfied, log it, move on, or shut down, right? But a trader after a stimulation style trade who's just doing it for whatever, stimulation or activity, it's like you're still activated, right? Your heart's still racing, the adrenaline's hitting, you're looking for that next hit. And so you start forcing the next setup. The win didn't settle you, it fueled you. And that's when the second, third trade, they give back everything, right? They show up and just gives back everything.
Man, all I know is when you're over leveraged and you're using a lot.
You broke up there, Kush.
I will say just a couple things. Kush said something and Ben said something. You both said something that like hit me because I do it a lot, and it's so liberating when you're in a trade and you've set your stop. I used to sit and like get nervous and watch, Now I get up, I'm like, my stop's set. I don't have anything to worry about. If it hits, it hits. I know I've got my it's set properly. And if it hits, it hits. I can go make some coffee, maybe get something to eat, come back, see what happens, and then I'll take it from there. That's a good feeling. The other good feeling is when I do get a winning trade, I write it, I log it in my journal, and I literally close my laptop. And those are both like new feelings for me, and it's like a new habit of mine.
And so not only have you gotten your behavior and psychology in check, Ice, right? But you're also, I mean, it's position sizing, right?
Yeah. I mean, obviously I over one of the things that's kept me even showing up all the time and not blowing accounts and not doing anything like that is being able to just be okay with, I mean, I had to start just recognizing that I need to lower my leverage. That way I can have a little bit more breathing room.
A couple comments from chat. Reese says, good evening, guys. My biggest hurdle was always overexposure and poor risk management. Journaling and auditing my own mistakes has been the most valuable and painful lesson from this. It's a game changer. I'm glad you said that. Journaling is painful. Why is journaling painful? In a good way too, right, Reese? It's painful in a good way. Why is that?
It's showing you where you suck.
You can't hide from it. You can't hide from it.
Yeah, when you journal, I mean, you don't want to lie to yourself. It's like looking yourself in the mirror. Like I tell my kids, don't do something or that you can't look in the mirror. Like when you brush your teeth in the morning, if you can't look yourself in the mirror, then whatever you're doing, you need to reevaluate. You know what I'm saying? So that's what journaling is. You know, I write down more when I lose because I understand when I win, but when I lose, and if the dots start lining up in one line, then I need to stop. I need to stop whatever it is right now. And I don't do it all the time because nobody's like perfect, but I recognize it. As long as you recognize it, you headed in some type of direction.
Yeah. So to finish Reese's 100% Bosco, to finish Reese's statement, he says, in the last 2 weeks, I've experienced a sensation that I didn't even think was possible. No adrenaline high, no immediate cheering for price. All thanks to dun, 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 proper risk management, proper sizing. It felt strange at first after years of oversizing, but the peace of mind that comes with it is eye-opening. It's almost like everything we're saying here kind of makes sense. kind of works. Mike says it feels like the markets hunt my entry and goes against it after 30 to 45 seconds after I enter. Then a ton of drawdown. Then if I hold through it, as soon as it comes back to my profit, I'm so quick to take it. Now all my trades are cut short there with more size, which I know isn't good. Mike keeps showing up, keep coming back. I'll be around some Sundays. Hop on in. We'll get to the bottom of that. But I'm gonna be honest with you, Mike. Here's a little cheat code. That was me. That was me a long time ago. That's probably everyone in here. I know it was Vasco. I know it was Kush. Right? I know it was all of us in here. To where we'll enter. They'll come for our stop loss, and then it goes into our direction. Right, fellas?
Oh yeah.
All the time.
And then
Never happened.
Then you're
shut up, Ryan.
glued to your shit trying to find a damn entry back in. Then you end up buying giant green candles and get dumped on.
But what did we do? Do we flip it on its head? And now that's us hunting those stop losses?
Looking for liquidity.
We flipped that shit on its head, Mike. Now we're the stop loss hunters.
Checking the boxes.
Yeah.
You could be a shark or a guppy, man. Which one you want to be?
You can eat or get eaten.
Well, look, that was my whole speech, and I don't think I got anything else written down. Let me just make sure. Yeah, I mean that's pretty much it. There's a few minutes left. If anyone has any questions or comments or whatever, I think we are gonna just move forward. I think the event calendar will change a little bit. I think we'll do the Friday after action report. Before or during lunch, whenever we're kind of just all done for the New York session. Wednesday groups will stay the same. Axing Saturdays, Sundays might be hit or miss or as needed. And I think it was a good conversation tonight, fellas. Felt good, felt honest.